Hey, welcome to my YouTube channel. Today we're going to be talking about Rocket Mortgages. So first, I just want to tell you that this company is a really good company in my personal opinion, and I'm going to explain why it's a really good company. And then second, I'm going to start off with kind of the company actually because I feel like for a mortgage company, one of the most important things is its brand, and then we're going to be looking at the leadership and then the fair value of the company and some other things. So it says who can use Rocket Mortgage. This just tells you really quickly why this company is going to grow. In my personal opinion, is so they literally have who this company, what people use this company, and it's if you are just starting your home search, and we are seeing people searching for homes and things like that more and more. And then it says have a home in your mind and want to make an offer. So a lot of people are going to be looking at that, and then also already have signed a purchase agreement. So they have a lot of different people. There's always a person who buys a home one time in their life, so you can expect that they're going to get a lot of customers. And you can look at some key metrics as well. So they've had 6.4 billion in total revenue net. And then you see 124 billion mortgage originations. Then you also see 3.5 times the industry average for refinance retention rate. So they have a good retention rate, which just means that the customers come back a lot, and so they just stay with the company and not another company. And they have a lot of team members. Also, they are telling you how they're going to grow and why to invest. But if you want to see more about this, then you can just go to their investor relations page. So search up the company name and then investors relations page after that. So here's kind of their history. So they say their history is inspiration for the future. It was founded in 1985. It was a brick and mortar mortgage company. Now it's basically all online, and so it's really good for this company. I think that is really good that they're all online. And so basically they're really big and they're a leader in the industry, and they've been innovating more and more. And so they're just going to continue to grow, and you can look at that a little bit more. So Rocket Mortgages, here's some good, when you search up Rocket Mortgage ratings, you can see that this company has a really good satisfaction rating with an A plus rating from the Better Business Bureau. Also, you can see that Rocket Mortgage has a lot of people. Trustpilot gives them, like, they have a lot of reviews, and that Trustpilot gives them a service a 9.5 out of 10 based on more than 1,000 views. So this company is liked by the general public, so it's really good for their brand. I feel like for companies like this, you should include the goodwill when you're valuing the company because it's very important. I feel like that is a very good asset that Rocket Mortgage has. And you can see some other things there. Also, Nerdwallet rates this a 4.5. You can also see kind of some other little cool facts about it. And this is very recent. This was October 5th, 2020, if you can see right here. So this is very recent. You can see the pros and cons, but then you can also see some of its competitors. And I feel like, yes, that looks better for the competitors, in my opinion. Well, at least better.com. But this company is very popular, and it just has so many good reviews. Then you can also see the Better Business Bureau. It's a 4.93 out of 5, average of 202 customer reviews, 5 complaints, but 3 of those complaints came in the last 12 months. And I feel like a lot of those complaints came in the last 12 months because people, I feel like, are just madder and kind of less willing to be nice and things like that during COVID-19. But overall, it's a really good company. This company is liked by the public a lot, and I feel like that's very important. So you probably have heard of this company by Graham Stephan or Jeremy from Financial Education. They personally like this company a lot, especially Graham Stephan. It's good to know that he likes it a lot because he's involved in real estate. He's a very successful person. He first really started with real estate. That's how he first became very successful, really. And so he really knows about that. He knows about the real estate market and things like that a lot. And he was saying on his Iced Coffee YouTube channel, the Iced Coffee Show, I believe. Anyways, he was talking about how everyone was talking about Rocket Mortgage. So if he's saying it, then it's probably good. Wait, and so now I just want to look at the CEO. So you can see the profile for the CEO, and basically the CEO has been around for a long time. Well, not the CEO, but the person has been around in the company for a long time, but recently came back in 2020. And so yeah, he seems to be really bullish on the company, as he has had some really good recent transactions of buying more shares recently on August 10th, 2020. You can see right here, and so he must be bullish on it. And by the way, at 4:30 today, probably, yeah, 4:30 November 10th. I don't know if this will come out later, but anyways, there's going to be an earnings call. So we're going to see that. But now I'm going to show you the fair value of the company. So I have the fair value at $45.94 in my personal opinion. But just keep in mind, this company has negative free cash flow. So what I just did instead was I went to Yahoo Finance. Then I just went to go to changes in cash. And so that is what I went to. And that is what I'm going off of. Because as you can see, their free cash flow is negative. And the only time it was positive was in 2018, at least in the last couple of years. So that's what I used, but this company is undervalued based on more than just that metric. Also, you can go to simplywallstreet.com. It says basically the same thing. And so I couldn't find a current or quick ratio. The debt to equity ratio is at 4.01. The average analyst price target is $26.73. You can see the highest analyst price target and the lowest. Also, you can see the management effectiveness. I couldn't find the return on investment capital. So we're looking at the return on assets, return on equity, the net margin, the gross margin, the operating margin, which is all really high. Their quarterly revenue growth is 424.8%, and their quarterly earnings I couldn't find, so I just put 10%, which is really, really low. And compared to their revenue growth, I'm pretty sure that earnings growth was pretty massive. And so you can also see a price prediction based upon those, and it's an upside. But don't really look at the next quarter estimates, because it really was so many unknown variables that I couldn't really find it. And so then we have the 1 year, 5 year, and 10-year projections for this company. I know this says EPS 5 year, but it's really the 10-year projection. And so in 10 years, this company has an upside of 1,000%. But remember, Dropbox has an upside of 500%. This one has even more upside, as well as more upside than Revolve, which Revolve's upside, if we go, I know I didn't show you this review yet, but anyways, is 563%. So this company is going to do better, in my personal opinion, than Revolve or Dropbox. And I haven't talked about it mainly because I'd never finished the research, because it was kind of a business or a sector or industry that I really didn't research a lot, because there wasn't that many good companies there. But this company seems like a golden gem. I think it's a really good company. Also, so this company is a really good company, but remember, it has negative free cash flow. Also, I just wanted to show you kind of where I got a lot of those things from, and also you can see some other things, how it's shorted a lot. I just had to mention that the short percentage of the float is really high, so just keep that in mind. So you can see what it looked like annually, what the revenue and net income looks like, and it seems pretty good, especially the last quarter, which, remember, their next quarter is literally today. So anyways, you can see it's really high, and they're growing a lot. It's just really a growing company. So in 5 days, it's up 13%. In 1 month, it's negative 6.58%. So like I said, you can see the 52-week range for this company was at $34.42 at the highest, and at $17.50 at the lowest. You can see where it's trading at now, and you can see the day range for this company. You also can see the EPS, the P, the forward ones, and it doesn't have a dividend nor a dividend yield. And you can see the short interest rate is pretty high. You can also see it has a pretty low market cap based upon its sales. Also can see some other things right there. So anyways, Rocket Mortgage was launched in 2015 as the face of Quicken Loans. As you remember, a lot of when we went right here, I believe. So it says both Rocket Mortgage rates and Quicken rates tend to be a little above the industry average. However, it's hard to beat the quality and ease of Rocket's online mortgage process. That is why people have realtors. It's because it's really a process that is kind of hard and it's kind of confusing, and it's supposed to, people pay that premium for a realtor to move the stress out of the way and just to make it be less stressful and easier. And so even if it has a rate like that, maybe a little bit higher, it's just a really strong brand, and the quality and ease of it is really smart and it's really good. Also, I just wanted to show you is Quicken Loans better than Rocket Mortgage? That was the whole point I went to this. So it says basically that Rocket Mortgage looks good online. Trustpilot gives the service a 9.4 out of 10 based on more than 1,000 reviews. Most customers speak highly of its speedy application process and responsive customer service. Rocket Rocket Mortgage's parent company, Quicken Loans, earns a solid A+ from the Better Business Bureau. But basically, what it also means is that a lot of people are researching based upon where they want to go, Quicken Loans or Rocket Mortgage. So it basically benefit if somebody goes for Quicken Loans or if they go to Rocket Mortgage. And so you can also see some other things about this company. But that's basically all I want to show you. You can also see kind of the performance of the company. There's not really a lot to go off of. This is a relatively newer IPO, and I think it's a really good company, and it's going to be a lot of success in the future, in my opinion. This is definitely a long-term play. You never know what to expect in the near term, but in the long term, I expect it to be really amazing. But that's all I have for you today. Make sure to subscribe if you haven't already. Also, just one quick fact, the institutions love this company as well. I think they're actually pretty correct on this because the company seems to be really an amazing company based on what I've seen. Also, you can see the sales and the market cap and the income, and then you can see all the ratios with that. So we're getting a price to sales for around 4.16, which is kind of low. I feel like anything below 5 is pretty low. So this is really good company in my personal opinion. I definitely would love to invest in a company with a price to sales ratio that low, a PE that low, and a forward PE that low when this company is expected to grow tremendously. But thank you for watching. That's all I have for today. And make sure to subscribe if you haven't already.